Hi, this is Amy with the US Chartbreakers here at Zach's Traders Cafe for Friday the 4th of August. Starting off with the S&P, and obviously we've had the bull trap top there towards 4,600, island reversal as well. The initial support was seen as being 45.20.30, obviously gone below that, below 45.20. There's the risk of previous June-July resistance down to the 44.60 area, maybe 44.50 as well. So that line there from back in March around 44.60, hence the view that that area would be potential support for this market if we don't get an end-of-day close back above 45.20 in the meantime. On to the stocks, and following up on the next the first situation actually, Bluejay Diagnostics. Here the shares gapped up, which is what we would have expected them to do, given the way that there was a consolidation at and above the 50-day moving average, which was rising near the lows, recent lows, but above $5, still looking for the upside to materialize. And ideally, we have price action on the right side of $8, which was previous neckline resistance. Above 8, looking for obviously the shares to retest recent highs towards $14, and then ultimately over the next 1 to 2 months, perhaps even as high as $22. But that is the top of a broadening triangle from the end of last year. But the situation here is that we really do need to see that $8 area hold. And if you're not in the shares, you wait for an end of day close back up above that particular level. Moving on to a new name, which is Confluent, and here we've had gap close buy signal. We've got rising 50-day moving average as well, rising trend channel there from back in December. And the view is that the longer the shares remain above that 50-day line, the blue line there, around $34, we could have a target as high as $44 by the end of next month. But a nice bear trap gap reversal there from below basically June support there around the $32 mark. Next stock is one which we're following up, EVgo, and here you can see that had a gap up here above the neckline resistance there around the $4.70 level. Above that, looking for not only a retest of yesterday's resistance and that resistance line there from last August around $5.80, but maybe up to $7.20 as soon as the end of this month. But the gap higher yesterday, completing a bear trap island reversal, which does tend to be one of the strongest setups that you can have. So a bear trap there below the initial 2023 support, and then pushing higher after that. Ideally, like to see on the right the shares on the right side of $4.60, which was the neckline resistance. Another new name coming up now, Hudson, and here we'll see that the shares have managed to gap higher after actually pointing this a bear trap gap reversal, quite a vicious one in fact, so traders would have been looking south rather than north. Current position is at above $10, which is recent neckline resistance, looking for the shares to hit the top of that rising trend channel from the beginning of the year as high as $13 by the end of this month. But a nice wrong footing maneuver there by the shares over the latter part of this week. Following up on a stock which is behaving rather well at the moment, Motorsport Games. Here you can see that it's been a bit of a rocky ride, but we still have the big turnaround. The turnaround is the unfold gap to the upside through the 50-day moving average, which we had at the beginning of the week. We've got a rising 50-day line as well, so that makes us assume that recent consolidation, or the latest consolidation, is a pause for breath ahead of a move to the upside, and certainly above $5, which is that resistance line there from April. We're looking for up to $9 by the end of this month. Moving on to one of our regular stocks here, and one of the better ones, obviously in the recent past because it's been a regular. Here we've got Nikola Corporation, and unfilled gaps to the upside earlier back in June, but then the big one this week through that U-shaped bull flag, and looking for the shares to hit $4.20 over the next week or two. Ideally, they stay on the right side of $3 in the meantime. On to another stock which is starting to appear here more frequently, Rite, and you can see why there. We've got a broadening triangle base, and the top of that heading for the 200-day moving average. We haven't been above that since this time last year, but it looks as though we've broken through neckline resistance. That's around $2.10, and above that looking for hopefully a smooth journey towards $3.10 and the 200-day moving average. Ideally, obviously, we beat that and go on to a new leg to the upside, which would be something along the lines of the resistance line projection I've just drawn there. But for the moment, looking for $3.10 while above $2 on Rite. Onto a stock which is moving and shaking at the moment. Sabre Corporation. You can see that had a handbrake turn there in terms of the price action, rising 50-day line. We tested the area near it, but then flipped back higher, and that handbrake turn through neckline resistance of $4.15 should be enough to take the shares up to $5.70 by the end of this month. Interesting to see whether the shares can break through that 200-day line, the black line there, at the first time of asking. Obviously, back at the beginning of the year, it was only a temporary affair there. On to a new name here with a strange code, ticker code. Here we've got Traeger, and shares have gapped through what was formerly June 2022 resistance around $5.50. Above that, on an end-of-day close basis, we're looking for the shares to hit as high as $8 by the end of this month. Obviously, one can't rule out a test with the support down towards $4.50, which was the previous neckline resistance before the gap higher. But in an ideal world, we'll stay above the $5.50 area on an end-of-day close basis. Moving on to another new name, and it comes in the form of Upwork. Here, a massive gap to the upside. Very similar to the last stock, actually, with the shares finding support at old resistance from earlier in the year, around $12.50. Above $12.50, we're looking for as high as $21 at the top of that rising trend channel from last September, and that could be seen by the end of this September. So hopefully the shares, as I said, will stay above the $12.50 zone. Moving on to the last three. The first one is via renewables, or via renewables, depending on your preference. Here we've got a broadening triangle base. We've broken through the 50-day line properly for the first time since back in February. Above that and above the recent support at $7.60, we're looking for the shares to hit as high as $17, maybe by the end of next month. But more time the shares can spend above $9 on the 50-day line, the better the outlook. On to yellow, which I covered earlier in the week, and it's making some progress. Obviously, pausing for breath here at the top of that gap down that we had back in February. That was around $3.40. So the more time spent above that, the better. Or the long candles there. So maybe selling coming in here, obviously. But we had a bear trap island reversal to start this rally. So it's a pretty strong signal. And really above the $3 area, looking for the shares to hit the top of that triangle there from back in the latter part of last year, as high as $6. Could see $6 by the end of this month, while above the $3 zone. Last stock of the day is Wayfair, and the shares gapping higher after having a decent run already. We already had a gap, started the rally there with a gap through the 50-day moving average, another one above it, and then gap obviously overnight. The view now is that we could head up to the $100 mark, but hopefully by the end of this month. And the reason for saying that is that line there from back in September last year is the top of that rising trend channel that's been in place since that time. Best case scenario up to $124 by the end of next month, but looking for $100 possibly as soon as the end of this month, especially while we remain above recent resistance at $78. That's it for me today. More updates early next week.